All right, we are going to dive into, that looks really strange. Hold on. There we go. All right. Dive into some employment and tax details again today. Kind of follow up on some of our previous conversations. Now, some of this information is a little bit dated and it's from the old 1040 EZ days. But I just kind of want to walk you through some sample questions related to income taxes, and then we're going to do one on our own. So here we go. On January 30th, Joanne Toscano received this W-2 form. Again, W-2, it's too late to change your information once you get your W-2. That's your wage and tax statement from your employer at the end of the year. How much did Joanne pay in taxes during the year? Oh, well, shoot. She paid $10,851. She paid 4733.7. She paid 1107.8. She paid all kinds of taxes. And also the 1092 down here below. I'm kind of looking for my cheat sheets here. See if I can come up with something that adds this up for me. Live video again, like I've said before. And do I have that in front of me? No, I don't. So guess what? I'm going to take a break here and do a quick calculation, as I'm so able to do. Excel again! Woohoo! All right. So let's see, Joanne, let me blow this up a little bit so we can see a little bit better. Let's see, Joanna had 15,851, federal withholding, 4733.7, Social Security, 1107.08 in Medicare, and 1,092 in state income. Actually, no, that's a lie. She had 5344.5 state income tax. That would be right here. Then she had local income tax of 1,092. That's 5 different amounts. Holy schmoly. That's a lot of taxes. So anyway, bam, she had a total of 28,128.3. Just out of curiosity, you look at that and you go, well, her taxable wages was 76,350. Check this out. 76,350 plus that divided by that is 37% of her money went to taxes. No wonder that boy was crying in that video I showed earlier. Taxes. I hate this game because of taxes. I hate yeah. Anyway, you get my detail. Yes, you do. All right. So moving right along here we go. She paid a lot. She paid 28,128.3 in taxes in the previous year. That's a lot. A lot of taxes. Okay. Now, I just lost my slideshow, but who knows? There we go. All right. Next question. What percent of Joanne's gross income did she actually take home? Well, if she paid, I was looking for kind of a kicker here, but if she paid 37% in taxes, well, how much did she take home? Well, 100% minus 37%, or about 63%. That's not very much. That's a heavy tax bill. But I mean, she might be, again, she's in an area where that has a state income tax and a local income tax too. Amy Springfield works for Pound Ridge Financial Planners. Employers use an electronic W-2 form as shown below. What accounts for the difference between her wages listed in box 1, 78,900, and her Social Security Medicare wages in boxes 3 and 5, 92,100. Why are those different? Well, she had $12,200. And, I'm somewhere in this range there because 10% of my money is going to state retirement, plus money that I'm putting in my own individual retirement account. $12,200 in retirement account creates that disparity between Social Security wages and reported wages, which will ultimately lead to taxable wages. So that's $12,000 of income that Amy did not pay income taxes on because the money was taken out pre-tax before income tax was calculated on her wages. Okay. Amy pays 20% federal tax and 7% state tax. How much did she save in taxes by putting money in her tax deferred and flexible spending accounts? Okay. Well, she has a flexible spending account of 1,000. She has, and by the way, that would also be the difference. That would be, go back to our question here. Why is there a difference? That would be her cafeteria and her 401k. 13,200. I got that one wrong. 13,000 total is the difference between those two amounts. That's what makes up the difference. And again, that's your flexible spending, the $1,000. But if she had 13,000 of income that she didn't pay taxes on, how much money actually ended up in her pocket in cashola for taxes that she didn't have to pay? Well, let's do the math on that really quick. Again, we have our 12,200, and I can blow this up for you here too. 12,200, this would be your retirement, right? You got $1,000 in flexible spending, FSA, or cafeteria 125 is what they called it. At the total of $13,200 of income that Amy was not taxed on. She has a 20% federal tax rate and a 7% state tax rate. Add those two up, and you got 27%. She has $3,564 ended up in her pocket because of those taxes that she did not have to pay. All right. Let's go back here. Where are we at here? Timeout. Not playing nice in the sandbox over here. Anyway, let's see here. Moving right along. Whoops, I just messed up. Sorry about that. Let's go to the right place. Bam. Okay. All right. Oh, this was a Form 1099. So this is a statement of miscellaneous income. So if you ever get earnings for being like a contractor, like I did some work for my former employer, Seneca Foods. I worked down in Buell, Idaho for like a week. I worked in Dayton for a week. And so they paid me a certain hourly rate because I was teaching at the time. I was working during the summer. They paid me a certain hourly rate. And then they just sent me a 1099 at the end of the year. Now you have to report this as part of your income. Now in this case, Avdi has royalties. So he was a book publisher or he's a book writer. And so he wrote a book and then they published it. And when they sell copies of his book, he earns royalties. The most common form of 1099 miscellaneous income would be non-employee compensation, number 7, where again, you're working on an hourly basis and you're not an employee. There's certain tests that determine whether you're an independent contractor or a paid employee. I'm not going to get into that right now. But anyway, there's a typical 1099, and that's something, again, you must report on your income tax. And down here below, it has state tax withheld and federal income tax withheld. Generally, employers do not withhold, I shouldn't say employers, people that engage private contractors are not employers. They're clients of theirs. They generally do not withhold federal income tax on the 1099, but they must give that to the people that do work for them and report that to the Internal Revenue Service. Okay, 1040 basic here. The 1040 EZ, which was a really simple form, was obsolete as of the 2018 tax year. So now we're left with the form 1040, which everybody fills out now. A dependent is someone who is dependent upon the wage earner for support. A spouse, a child, even a parent could be a dependent of their child. Somebody else that's adopted, some sort of legal person that's dependent on that person's income. So dependent. That'll determine how much money is withheld, how much money you get a break on for your taxes. An exemption is you essentially add up your exemptions. I'm going to say there's withholding allowances. That's on the 1040. Exemptions are you, your significant other, like a spouse, your kids. They would total up all of your exemptions, and that reduces your tax amount. Let's go back really quick, though. W-4 form, your allowances. You could be, say you're married with 2 kids. That would be 4 exemptions. But if you have lots of charitable giving or a lot of home mortgage interest on your W-4, you could claim married with 8. You're like, well, that sounds illegal. No, I'm trying to match up my tax burden with my tax withholding. So my tax burden may be calculated at married with 4 exemptions. But in order for my taxes to work it right with withholding, I may need to take more allowances. And if that's something you want to ask me more about, I'd love to chat with you about that. But you don't necessarily have to have actual dependents to match up with your allowances on your W-4. Because remember, your W-4 is what you're creating and giving to your employer. Itemized is that Schedule A where you list off your, like I said, charitable giving, home mortgage interest, state income tax paid, medical expenses if they're above a certain level, moving expenses, certain self-employment expenses, on and on. There's a whole bunch of different stuff there. Most people now do not itemize because the standard deduction or the base amount they give you is way more than you can actually show documentation for. And that's what I just said, the standard deduction, which we're going to see here today in action. So we're going to go through a sample, and this is kind of using some dated 1040 EZ information, but you kind of get the gist here. Allison is a food editor. She got a W-2 form. She got a 1099 from her savings bank. 1099 would be INT, or money from interest, as opposed to 1099 miscellaneous. They both have 1099 on it, but they have different letters by them. What's Elizabeth's adjusted gross income for the year if she files as a single taxpayer? Here's her W-2. There's her 1099. Notice down here in the fine print, 1099 INT. So she got $956 in interest from her bank. And there's her job with her federal withholding and all that stuff. Okay. So here we go. We're going to put, now this says 1040 EZ. Yes, I know this is dated, but it's still somewhat valid. We put in Elizabeth's name and her address and her bogus Social Security number up here. 83,600 comes from the, hold on, wrong button. Comes from 83,600 on her W-2. She got it from her employer at the end of the year. The interest, the 956 of taxable interest, comes from here, her 1099 INT. She has total adjusted gross income of $84,556. She is allowed as a single person. Now the form we're going to look at here later on and for practice will look a little bit different. It's the new 1040, but incorporates some of these same principles. But being single, she's allowed a standard deduction of $89.50. Okay. So she has taxable income of $75,606 from page 1 of her 1040 EZ. And again, we'll look at something very similar to this. So that's how much she actually has to pay taxes on, is that amount of income, depending on whatever tax bracket she happens to land in. Okay, so there you go. Now we're going to go find what her taxes are. Now, these are dated tax tables. They're not going to be like the one that I share with you for 2020. These are probably from like 2009 or something. I don't know. I'm just guessing, but that's probably going to be pretty close. So she has taxable income of 75,606. I find the largest number in this first column that is less than 75,606. That is 75,600. She is single, so her taxes are going to be 15,250 from the tax table, from the pages and pages of tax tables. Yes, 15,250. Okay. All right. So we come down here, and well, where did the 15,884 come from? Federal income tax withheld. Well, that came from her W-2 right here, 15,884. When you get down to the bottom of her return, she has 15,884 of tax withholding, or her payments that she's made against her tax bill. Her tax, which we just looked at here, 15,250, we're going to enter down on this line. So she's made payments of 15,884. She's had tax withholding of 15,250. And I hope you can see where both of those amounts came from. All right. Now, in the end, she's going to end up, well, we're going to get to that in a moment. Sorry. Rose Elizabeth has been filing as married, filing jointly with her husband. Their combined taxable income was the same as reported. Why is married filing jointly tax lower? 11,594. They call this like the marriage benefit, right? For filing as a married couple. Okay. Because when you do that and you start adding your wages together, without getting into too much detail at this point, which we'll maybe talk about later on, the second spouse, all of their income is falling into the tax bracket. So when you add them to, you're not getting the benefit of the lower tax brackets for both people. So therefore, because the taxable income might create a higher tax bracket, they kind of take the burden of that away by lowering the tax on married filing jointly individuals. Does Elizabeth get a refund or owe the government money? Well, she paid 15,884. She owes 18,250. And I think you can see she's got some money coming back, right? And you take the difference between 15,884 and 15,250, you come up with $634. Not a bad guess for whatever she had, like $75,000 of income, right? So she's going to have $634 coming back as a tax refund. She just wants to take all of. She puts her bank routing number, that number that identifies her particular bank and branch, going into her checking account and putting the full account number from her checking account in there. These are the numbers that when you fill out your tax return, whether it's paper or electronic, you are making sure that those numbers, and usually you'll see them on the bottom of your personal check. You'll see that routing number and account number side by side, and those little funny codes at the bottom of the check. Make sure, double and triple check those, make sure they're accurate. So that money indeed shows up in your bank account in a couple weeks. All right. So that was our run through on a simple tax return and some background information around that. And our next step will be to create a tax return together on a husband and wife with a fairly simple tax return. All right. Thank you for watching.